Today, we're diving right into the world of banks and other financial companies, because now is the real time to get your money out. Yes, Robert Kiyosaki is sounding the alarm, and it's not just any bank that's going bankrupt. It's Credit Suisse. Why Credit Suisse? Grab a drink and hold on tight, because we're about to find out what really caused this big financial problem globally. This week has been hard for banks and the business as a whole.
The world economy is heading into the worst economic headwinds since World War II.
Whether you're a seasoned financial expert, an investor, or just interested in how the U.S. economy is doing right now, you've probably heard something about the problem in U.S. banks. Credit Suisse, Switzerland's biggest bank, is at the front of this mess, and there's a lot going on. Stay until the end of this one, because you don't want to miss this. The history of how the banking system slowly fell apart. Let me take you on a quick trip down memory lane to help you understand this situation. This kind of thing doesn't happen for the first time. The first time a bank failed in the United States was in the early 1800s. But let's start with the Great Depression because it's still fresh in our minds. During the Great Depression of 1929, one of the most well-known bank failures ever took place. The stock market crash in October 1929 was the start of the whole crisis. When stocks kept going up and companies chose to lie to their investors about how their finances were doing, people started taking their money out of banks out of fear that they would lose their life savings. Over 9,000 banks failed because of the sudden fear and effects of the stock market crash. The Federal Deposit Insurance Corporation, FDIC, is a set of rules and policies put in place by the U.S. government to keep banks from failing in the future. The FDIC was set up in 1933 to protect savings in Consumers Bank in case the bank failed. In times of economic trouble, the FDIC has been a lifeline for many people, and its services have kept billions of dollars from going to waste. But recent bank failures, most notably the 2007 to 2008 banking crisis, show that these measures have not been enough to keep banks from going under. You might have heard of the Great Recession. The Great Recession was a terrible time for the economy, but the banking crisis of 2007 to 2008 was the most important cause. It was similar to the one in the 1980s, but this time it was caused by risky mortgages that led to a housing bubble. When the bubble burst, not only the banks but the whole U.S. economy went down with it. The impact of bank failures have been terrible. It affects people, companies, and even whole countries. When banks fail, people lose their funds and businesses can't get money, which makes it hard for them to keep running.
But I just watched what happened after 2008. And, there was a repo market crash. All these crashes were happening. But the average person without financial education, unlike you and myself, has no idea what's going on.
This can start a chain effect that slows down the economy and makes unemployment rates go up. From past bank crashes, it's safe to say that this is pretty close to the truth. Now there are rumors that yet another bank is about to fail. Credit Suisse has been in the news lately because of rumors that the company is about to fail. Analysts tell people to get their money out of the bank, while others think the bank will be fine. I don't know which one it is. Let's look at this bank's history just to be sure, shall we? Credit Suisse, a well-known Swiss multinational investment bank and financial services company that has been around for over 164 years, has passed the test of time. It has been a major player in the financial industry, offering top-notch services to wealthy people, businesses, and governments all over the world. But over the years, the once dominant Credit Suisse has slowly lost its position, which has hurt its image and bottom line. Let's look at where Credit Suisse came from and what has caused its slow fall. Credit Suisse was started in 1856 as a private bank in Switzerland. It became one of the most important banks in the area very quickly, and it started offering financial services to wealthy people and companies. Over time, Credit Suisse expanded outside of Switzerland and became a major player in the financial business around the world. It set up offices in New York, London, and Hong Kong, which are all important financial centers. It didn't take long for it to become a top investment banking and wealth management business. Credit Suisse was one of the most important names in the banking and financial business. It was known for its expertise in equity research, fixed income, and wealth management services for people with a lot of money. Credit Suisse's decline, on the other hand, started to show when it was hit by a series of scams and bad management. In 2008, the bank put a lot of money into the U.S. subprime housing market, which caused it to lose a lot of money. In 2012, the U.S. government fined Credit Suisse $536 million for helping Americans avoid paying taxes. Oh, I'm not done yet. In January 2022, the bank's CEO, Antonio Horta Osorio, quit after it was discovered that he had broken COVID-19 rules.
The bank's chairman, Antonio Horta Osorio, has resigned following an internal probe into his personal conduct, including breaches of COVID-19 rules.
Clip 3. Discussing bad news. The first criminal trial for Credit Suisse happened in June 2022. The Federal Criminal Court of Switzerland found the bank guilty of not stopping a Bulgarian cocaine trafficking gang from moving money. Credit Suisse got a fine of $2.1 million from the court. Credit Suisse seems to have had nothing but bad luck. These are just a few scandals that caused shareholders and clients to lose a lot of trust in the bank and hurt its image. Credit Suisse's slow fall has also been caused by its inability to change with the changing market. In the past few years, many banks have adjusted to changes in technology, such as the rise of online and mobile banking. But Credit Suisse has been slow to adjust to these changes, which has made it fall behind its rivals. Its fall has also been caused by the fact that the bank has trouble making money. In the past few years, Credit Suisse's main businesses have brought in less money, which forced the company to reorganize and cut jobs. In 2019, the bank said it would make a big change to how it works. It would cut back on investment banking and focus more on wealth management. Here's what you've been waiting for. What's happening at Credit Suisse? What does Robert Kiyosaki have to do with this? If you're ready, please subscribe to the channel. I see you're loving this video, so give it a thumbs up and share it with other people who like to be in the knowledge just like you. Stay a little longer, because what I'm about to tell you will blow your mind. The Credit Suisse crisis. Robert Kiyosaki is a well-known businessman, financial planner, and author of the best-selling book, Rich Dad, Poor Dad. If you've been watching my video, you already know that I love Robert Kiyosaki's books on money. I've talked a lot on this channel about how good he is with money. Robert Kiyosaki has been outspoken about his worries about the security of many financial institutions, including banks, over the years. He has given Credit Suisse his most recent warning.
And my prediction, I called Lehman Brothers years ago, and I think the next bank to go is Credit Suisse.
In a recent interview, Kiyosaki expressed concern about the impending collapse of Credit Suisse, claiming that the canary in the mine is Credit Suisse, which is falling. While you can, leave. He continued by saying that he thought the collapse of Credit Suisse would have major consequences and might lead to a collapse of the global financial system. And based on what has happened during previous banking crises in the nation, it is safe to infer that Kiyosaki is knowledgeable about the subject. Kiyosaki has predicted the collapse of financial institutions before. He has long issued cautionary statements regarding bank instability and has previously accurately forecast the collapse of a number of banks. One of his most noteworthy prophecies concerned the 2008 financial catastrophe. One of the first financial experts who foresaw the impending collapse of the property market and its potential effects on banks was Kiyosaki. One of the greatest investment banks in the world, Lehman Brothers, was predicted to fail by Kiyosaki as well. In a 2006 appearance with Fox News, he claimed that Lehman Brothers was bankrupt. I advise individuals to sell their investments and leave the market as soon as they can. Lehman Brothers declared bankruptcy 2 years later, precipitating one of the largest financial crashes in recorded history. Along with Lehman Brothers, Kiyosaki foresaw the demise of Bear Stearns, another significant investment bank. He advised consumers to stop investing in real estate and stock markets and switch to precious metals instead, warning that if Bear Stearns fails, many other banks will follow. In fact, Bear Stearns collapsed, demonstrating Kiyosaki's clairvoyance. Do you notice a pattern here? That is what disturbs me about it. Given that Kiyosaki has previously issued correct warnings, his recent warning on Credit Suisse is all the more concerning. If Credit Suisse fails, other financial institutions might follow, potentially resulting in a global financial crisis. According to Kiyosaki, who recently spoke with Fox News, I predicted Lehman Brothers' downfall years ago, and I think the next bank to go is Credit Suisse. Robert believes that the collapse of the bond market is what is causing the issue with Credit Suisse. Robert clarified that the U.S. could face major difficulties as a result of the bond market fall and the failure of Credit Suisse. And by serious difficulties, he means he anticipates a decline in the value of the dollar. The negative news just won't seem to stop hitting the U.S. economy. Bailouts start, Kiyosaki tweeted on March 13th. Sick economy? More false money to come. Let me know in comments what you guys think about this. Would love to listen your side too. Thanks for watching.